can do the housekeeping. So today for CPE, we're doing it a little bit differently. We will have polls throughout the presentation, but today we're going to try something new for CPE. So everyone that requires CPE needs to go to the website there that you can see on your screen. Now this will be available for a couple of hours after the webinar, so if you don't have a mobile device or a tablet, then it's okay. You can come on after the webinar, fill that in so it gives us feedback, proves that you attended, and then we can issue the CPE. So if you do have a spare device, you can go to goo.gl/T uppercase D AG uppercase L6, and we'll get the CPE process through that Google shortcode. So that'll just be a survey. So as I said, if you do have a mobile device, you can open that, go to that web page now and follow along as we go. But that web page will be available and it has been emailed to you, and we can email it to you again. But anyone that requires CPE will need to fill that survey in. And any questions, shoot us an email. Obviously, just want to bring your attention to the rest of the webinars that are available to 2020 folks. So we jump online. We've got webinars, we've got seminars, we've got the tax season bootcamp coming up. So make sure you do log on to 2020groupusa.com, and you will see a whole host of information about our upcoming professional ed programs. Right. What I will do is I will hand over now to Mike Milam. He will give a background to himself as a CPA, his CPA firm, and then also a little bit of background around Premium LLC. But as I said, next week we have another webinar that focuses just on the tax planning strategy that is captive insurance. But Mike, I will hand over to you, and I will encourage anyone that has any questions throughout today's presentation just to write them in the question box, which is in the control panel of GoToMeeting. So anyone with any questions, please ask those. We'll interrupt as we go through. But Mike, I will hand over to you, and let's get underway.
All right, I'm ready to go. I just put up that one slide here on premium. Just quick comment, and Jeff Moffitt's the one that runs that and can explain the details there of how captive insurance works. I was basically looking for something where it was just vanilla captive insurance. They weren't trying to put life insurance in it. They weren't trying to do all the things that kind of make it, not a good product. Basically, causes the audit risk to be too high. People make a lot of money doing all those other things, but I wanted something that wouldn't embarrass me in front of my clients, and that's how Premium LLC came about. But I'm focusing right now here on tax planning. I'm the managing partner of Milam Connect and Warner, as Damien said. We're about a 30-person firm. I'm counting from the doorman, everybody we can. We do a lot of sophisticated tax planning, a lot of sophisticated tax returns. We're pretty much a full-service firm. We have audit. We do all kind of attestation. We do a lot of transactional work. We do a lot of estate and gift work, but it all revolves around the planning up front. The questions we see all the time is that in surveys where people are talking about their client not getting, the clients are saying my CPA doesn't get back to me. Common one is I don't think my CPA is finding all the deductions that are available to me. I think that they come along saying I think my CPA is waiting too late to do the planning for me. We know those complaints. And then the one that we hear all the time is that, on April 15th or April 12th or something close to the end, they told me that I owed, X dollars, and I wasn't expecting that. And it's taken all the fun out of the hard work that we do. Today's webinar, we're trying to look at basically three different areas. What the average existing CPA model is for tax planning. 2, how to step it up a notch and involve our clients. And then basically, how do we have an actually client-centered tax planning meeting? The average CPA model is they come along, we get the numbers, we probably don't even talk to the client, we talk to the bookkeeper, the controller, we get the numbers, we do our crunching, we do our planning. We may actually do really good planning work, but the client's not seeing any of that. And then we basically say, hey, you owe this much money, and boy, we did a good job lowering it, but we don't tell them how much we lowered it and what went on there. So, this is the average CPA model. It does not help the client understand what happened. There's no team effort, and they haven't learned anything new on what's going on in overall tax planning. I've got this slide here for us. We started our firm from scratch. I was with Ernst & Young and left and went into industry for a little bit, came back and had a few clients follow me, and I started up firm, called a buddy from college and said, hey, why don't you quit your job and let's go find some clients. And so we built this up to about $4 million. And, we land a lot of clients. And I hear every time when I'm talking to clients that are, new prospects is, boy, I don't think my accountant is finding all the deductions they can be doing. I don't know if they're really giving me good strategy. And we kind of look to ourselves and say, boy, are we really doing that? We kind of had a self-awakening there, saying, boy, we crank things out, we think it through, we think we're doing it. We're always so busy. Every time we crunch to the deadlines, then we're exhausted for 2 or 3 weeks. We've got to get bills out, and then we get into the next phase of, do we really have time to plan? And I think what Damien pointed out is we definitely got to look at our A and B clients, and really say, okay, what can we do? So we started a process, and we call it our business tax diagnostic. We're going to call it the checklist during this presentation here, but we basically take the time to sit and meet with the clients and make sure that we have a whole process to find every deduction. And it does take time. I mean, sometimes these meetings will last, 1 or 2 hours, but a lot of times they'll last 4 hours. Some people have gone a lot longer in a newer client, or they want to break it into 2 or 3 4-hour meetings. But to really understand the business and everything, it does take the time to do that. In the average CPA model, there's not a whole lot of love for the accountant. There's not the clients aren't even loyal. They may have known you for a long time. I've got one prospect that I've been chasing. They've had their accountant for 22 years. He's a real nice guy. But when I came in with my planning process, and they could tell right off that, boy, he's not doing any of these things. At least they don't know that he's doing any of those things. So it was real easy for me to get in there, chip away, and basically we have just recently landed that client. But that, they've got to be involved. We talk about, they don't understand the process, the client. Some of it, doesn't have to be. Some of it, when we're explaining to them, seems so simple, but we do this day in and day out. We've got to really make sure that they see all the pieces. So either they don't see the process, or sometimes they don't even believe that we're doing anything. So when we come to tell them, here's what we've done, or here's what the tax owed, we kind of just say, you kind of look like a clown because they don't know what the heck you've been doing. So we say, hey, let's formalize the process. And these 3 items should all have them in it, really, but we want to make sure that we meet and plan with the client, with them. We want to have them explain their business to us. We want them to explain all their revenue streams, so we understand exactly what streams of revenue they have. I'm amazed how much I learn when I'm listening to a client that I might have had for 4 or 5 years, and when I'm taking the time to really understand their business, and I find that they have new revenue streams coming on. There's just a lot of opportunity for planning. I start finding out they're doing more overseas, and all these flags are coming up where I'm saying, boy, if I'm not collecting up this information in a concise, methodical manner, these items are going to slip past me, and I'm not going to be able to plan. Or when I'm doing the tax return, it's too late. I haven't had a chance to do it. And then I formally collect the data from them. I may have some things I get from the CFO or controller or bookkeeper that I get ahead of time, but I want most of the information coming directly from the owner.
Mike, excuse me, Mike, why don't we just pause there very quickly and launch a poll question, because I think that's a really good segue into just to find out, get some feedback from the audience about the level of tax planning that's going on in CPA firms. So just a little bit of feedback for us. Do you offer tax planning to all of your clients? Yes, all clients are encouraged to do tax planning. We offer tax planning when we think of it. Some we do for some when they ask for it, and then few with we don't do it at all. So let us know, give us some feedback, just so that we make sure that we're on track here with our presentations. But it looks like 2/3 of the audience coming in at we offer tax planning when we think of it, and that's probably most prevalent. 30%, so well, hang on, we'll look at the numbers there. About a quarter are saying yes, all clients are encouraged to do tax planning, which is great. About 2/3 saying we offer tax planning when we think of it, and 4% when a client asks us. So we definitely want to move away from that up into that upper echelon there of yes, all clients are encouraged to do tax planning. So let's just close that poll, and Mike, I'll just share it with you very quickly so everyone can see what the results are. We offer tax planning services to clients we think need it, and I would encourage everyone, and Mike, you might have some advice here as well, just to suggest that you never know who might need it, and as you said, you never know what might have come up. If you don't have the conversation, you'll never know. So let's move up to we encourage all clients to do it, and Mike will show us his process and system. So Mike, back to you.
Perfect. All right. I kind of keep reminding myself that the tax planning is a team sport. I can't do it in isolation without the client. The client doesn't have. Go ahead.
Mike, just to interrupt you, just going back into your resume slideshow, if you wouldn't mind just hitting that button up the top there.
Oh, you jumped me out. I got you.
Sorry about that.
I got it. I see what happened. Okay.
Thank you.
Is that working now, right?
Yep, perfect.
Okay. Team sport, we want to make sure that everyone is involved in that. And then I put this, income tax precedes estate and asset protection. I try and tell clients that we've got to, work as a team on all these areas. I've got a very large case I've been working on for about 2 years now, where I'm undoing some estate work. It was, I'll say it was great estate work because they were working very hard to pass a lot of the assets on to kids and all kinds of stuff. But it's such horrible tax planning, the income tax planning with so many C corps, and no way for me to undo a lot of that easily. And I see that all the time. So I basically usually tell my clients, hey, let's start with the income tax planning. If it's a push to get the estate going, we do that somewhat simultaneously, but we can't put the estate planning and then the asset protection before figuring out the income tax plan. And then there may be some income tax items that we pass on because the estate or asset protection is more important. But at minimum, I want to at least have thought through the process and not be boxed in. I like to start the tax planning early in the year. So if I can get things set up, and we use XCM, which is our workflow software. There's several of them out there. That one's just worked the best for us. And one of the tasks we set up is the tax planning. So for all my A and B clients, we've set up tasks that said, yeah, this client needs tax planning. Or even if they may need tax planning, I get it there, and then I triage, because if I run out of time, I want to make sure I've started with my most important clients and worked my way down. But we try and push it out to the different staff to help collect up the data, so that when we get ready for the actual tax planning meeting, a lot of that's being done at the partner, down to manager level. But there's a lot of things that the staff can do to help us get there. I always tell people that my busiest time of the year is November and December, because that's when I'm bringing all our tax planning to fruition. Everything that we've done has to be finalized before the end of the year. I always tell my clients, it kind of just helps them. I remember that, I always say it's tax planning when it's done before December 31st and tax fraud when it's done afterwards. Let's spend the time. Let's do the planning. and that usually gets them thinking about it. I had one client I was working on a lot of years ago, and it just struck me so funny that we were explaining to him what he'd been doing with his accountant, and he'd been overpaying this tax for a lot of years, and he just structured a little differently. He could have saved quite a bit of money each year. And he said, I can't believe it. I've been paying an idiot tax for every year for all these years. And that's not a very good selling term for me to use when I'm dealing with my clients. So we've called it the uninformed tax, that they can do something, they're uninformed. Had they thought about it, they could have restructured. A simple example is, are we netting our capital gains and losses? Are we not, letting a bunch of gains happen and then losses the next year where we could have netted them? We have to think through that, but I remind my clients this is an issue that happens in many different areas, and they just called me and thought about it and said, Mike, let's do a little planning before this transaction and tie that into my total overall tax planning. And I get those clients thinking about it all the time. And you get some clients that are hesitant to call because they don't want to burn up a lot of billable hours. Once they really start seeing that we're adding value by doing the tax planning, I find that they're chasing me more on the planning than I'm chasing them. But it's a teaching process. I really push the tax planning meeting. And as Damien said, I've never had it where, clients come out of that many times. We spend 2 to 4 hours. We basically lock ourselves in their conference room, my conference room, or we go off site somewhere. No cell phones, no interruptions. We usually have lunch brought in, and we're going to work through our whole planning binder that I'm going to talk to you about. But that way, and I've told clients I said, if you don't think this is of value to you from this meeting, you don't have to pay for this meeting. And I've never had anybody not want to pay for the meeting. They've all found the value. And a lot of times it seems really simple. Some of these things I'm going to talk about, you kind of go, boy, that's very elementary to be going over these items. To the client, it's not. And they really start to understand more and more. And they, that part of feeling like they're part of it really starts to show up. A lot of times I'll bring in 2 partners. It gets a little more expensive for the client. I'll have 2 partners, or I'll have a partner and a senior manager or manager, and that's a little bit of an art because you're throwing out ideas, you're thinking it through. The tax planning meeting is not to come back and at the end and say, here during the meeting we've come up with a perfect plan for you. It's more of gathering information, but it's a lot of throwing out lots of ideas. When I say it's an art between the partners or the partner manager, you don't want to say, well, that's a stupid thought, Mike. The law works this way. There's some balance so that you don't make the other person look like they've gone way off the range, but sometimes you do need to help rope the other guy in and say, hey, have you thought about what if we did it this way? And it's just practice there. With new clients, this is a big selling point, that in our proposal letters, we're always putting out that we will have a tax diagnostic meeting with them. And, depending on the size of the client, I usually will throw in that it's, 100% guarantee. If they don't like the meeting, they don't pay for it. But I land a lot of clients because of this tax planning meeting. I usually start out my tax planning meeting. I go through this quote that Judge Hand of the U.S. Tax Court, over and over again, courts have said that there is nothing sinister in so arranging one's affairs as to keep taxes as low as possible. Everybody does so, rich or poor, and all do right, for nobody owes any public duty to pay more than the law demands. Taxes are an enforced extraction, not voluntary contributions. And basically, I get some clients that are, most of them say, yeah, that's right, and that's why we're doing this. Some of my clients, they're just so nervous about taking, following a law to pay less tax, even when it's right, that they get all nervous. This kind of brings them into the range there that, okay, this is what I'm supposed to be doing. But we still, go back there, we still figure out what level of risk they're willing to take. And and they can decide, is it too aggressive? That there's a point where the client's too aggressive for me, and I have to pull them back in. Usually, what I have is a 2-inch binder. Try to make it look as fancy as we can. It's got dividers and all kinds of sections to it. But I usually have it stuffed before the meeting. I usually have the prior year's individual federal and state tax returns there. I'll have all the entity returns in there. I'll have prior year and current financial statements, any projections I can get. I don't make a big deal about trying to get the projections. A lot of that happens during the meeting, but if they have it, I try and have it ahead of time so that my head is in the game. I'm ready there to start the meeting that direction. I usually start the meeting in this order here. I usually go through and review the financial statements last year, looking at last year's tax returns, pointing out things that were done, maybe the difference in the M1 schedule, just trying to get an understanding for it, how much tax did they pay. I start to add up all the taxes they paid, corporate, individual, and I start to see that it can be a hefty amount, and our job is to say how much of that can we save. And as they start to see that, we're really adding value. So paying our bills is not as we've earned our keep. Basically, is probably a better way to say it. We look at the current year's financial. I got current year tax return, but a projected return. Any projections. Right about here is where I start, and I go into it in more detail later on. But I want to understand right off the bat if they're doing anything, any capital acquisitions that's happening this year or next year, and then I kind of understand where I have their estimated taxes, but I make sure that they've been paid, and we talk about what they've paid in, and could we lower those estimated taxes, and then I start the planning checklist. But I put this slide in here. This is the point where I really have to hold my tongue and listen to the client, because I'm really trying to learn their business. Because if I was the expert of the XYZ item, I could be making that widget all day long, but I'm not. So I got to really understand where they are. If it's a newer client, I always ask them, how'd you get into this business? How'd you get started? That really kind of warms them up, because I've never had someone not explain to me in detail about the business. But as I see as it grows, as it's grown along, it has really, I can see how it's evolved and where they're headed. And I start to, question them about, walk me through the revenue cycle, walk me through your marketing and sales. I'm really trying to understand everything I can possibly understand about the business, because those are the things I'm going to capture in my planning process. My tax planning checklist, and I'm flipping here with a couple of papers, because I've got my binder in front of me as we're working our way through this. I start out, I have a worksheet that we have for each entity. So if they have one corp and that's it, that's fine. But if I have multiple entities, I've got multiple worksheets. And these worksheets, I'm trying to make sure I've got all the data that I could capture on that entity. So I'm getting the formal name, I'm getting the officers, who does what, I'm making sure I understand the type of entity, I'm going through understanding, what the year end is, accrual cash, trying to understand all different areas there, make sure I understand the ownership exactly right. And I go through that in each one of their entities. I'm always looking away with, looking for hot buttons as I'm talking to them, things that I think that they'll hook onto right away, where they'll say, boy, this is something I've got to look at and get into in more detail. I'm keeping my eyes open if they've got, real estate in a corporation or something goofy they shouldn't have. Then I work my way. I found that just quickly, and I'm not the best artist, but I quickly diagram the ownership right there. If it's been a client I've had for a long time, I have that diagram already done and printed right into my book. But right then, so I go through the diagram of the ownership. It's just a good visual when we're talking about planning items, I'm able to point to that diagram throughout the meeting for the client to see where they, they can see how they interact and what we might try and do and how we might split entities apart, etc. I go down through my perm file document checklist, and I'm basically, part of this, I have a lot of this stuff, but I'm asking the question to make sure, yeah, do I have this or do I need it? And a lot of it's just to prompt questions for me to ask the client or the client to ask, ask me. I'll go through and make sure I've got the articles. Do I have the shareholder agreement? No, they don't even have one. Bylaws, who's on their board? What are you doing with your minutes? I'm working my way through that. What kind of loan agreements do you have? Both, financial institution, related party loan agreements. I'm looking at asking for revenue by sources. I'm asking for, a lot of times I'll ask at this point, even though it's my perm area, I'm asking for inventory agings, working my way through that, any multi-state issues, and I'm just trying to get copies of anything I have, charts of accounts. I've got a whole list of items here that I work my way through, and usually it's just prompting a question that the client has thought of something, or I have thought of that, and say, well, this is something we'll put on our need list, and when we summarize it, these are the things we'll be capturing. A big part of this meeting is to come back with what do we need to finalize or to work on a tax saving strategy. The next area I go into is making sure I have an updated list of their advisory team. I want to know who I need to work with, who might, be a troublemaker or whatever. But I go through my financial. I want to know who their bankers are. They've got separate equipment leasing people they deal with. Who are their retirement plan people? Who, do they have third-party administrator? Who's their broker dealer, life insurance. I've got all these different ones we capture, and I have a rating system where we basically ask them what we think the caliber is of each one of these. We explain to them it's important for us to work with these people, and we're able to work with anybody. If we see somebody that they don't think is doing very well, and I think I might be able to bring somebody to the table to help add more value, I'll definitely refer one or two in there. But I'm basically trying to make sure that I've got a good team, because I've had some great tax planning meetings where we've really sat with all the advisors without the client and argued our way through what might be the best solution for the client. No one has to showboat at that point in front of any client. We're just working it out. So you can say, oh, that's not a good idea, or that's, and we usually come up with one good idea, or set of ideas that we're all behind. We say, boy, that's probably the best for the client. Let's present that to the client. I like doing that. That works out really well in planning. I have a tax calendar responsibility checklist, and a lot of this is just to kind of see if they're doing it and where they stand. And I'm going through items where, they've got ADP or anything, but I'm going through and saying, who's doing your payroll, who's filing your property tax reports, who's doing your sales tax, use tax, 1099s, who's filing the 5500. I work through all the items, any Secretary of State filings they have to do, and I'm basically, my engagement letter protects me on what I'm doing when it comes to what I'm preparing. But I use this too just to make sure that we've pointed out this is something that we're not doing, or this is something that you're not doing either, and we probably should have it done, and maybe we do have an issue. Maybe if you're operating in this city, you really do need that license, and we work our way through this, called our tax calendar responsibility checklist.
Hi, Mike. Mike, can I just interrupt before have you finished with that slide there?
Yeah. No, not with the slide, but with that area.
Okay, let's have another poll question where we asked, have you formalized your tax planning services, a bit similar to what Mike is doing. But also, while we do that, Mike, we had a good question come in that asked, do you do this for every single client for every meeting, or just new clients? So I guess good question there, that are you not answering questions that have already been asked and answered before.
Right. Yeah, I do. I definitely don't want to ask the same ones twice. But what I do come back with is I keep a binder for each client. So if we've done this before, I've got all this information. And so second, third, fourth meetings, those meetings become a lot shorter because we're looking at, some real specific things. We're looking back at what we've done and over last year, how much did we save, and then what can we do? That's where clients are always chasing me. We've done this, we've lowered the tax, now what can I do? Now what can I do? And that's where we're always looking for new ways, new tactics to save tax. But okay. So I keep this notebook all the time. I call it my value binder, and I have all kinds of things in it. So when I meet with them, we're always working on building the value of that company.
And so a couple of other questions that have come in, Mike. In terms of charging, have you ever just charged a fixed price for the tax planning meeting?
Yeah, I mean, we've done that before where I'll throw out, I usually just use my rate, and I just say, the initial tax diet, because in my engagement letter, I lay out a range, and I say that the tax diagnostic meeting will last, will cost, X to Y. I'm playing around here if I trying to find one of my, but I might tell them, hey, this could run anywhere, from $1,500 to $3,500, depending on who's at the meeting, and also the size of the client. If I think I need to have a couple of us there because very large client, then I'll double that. But these meetings are usually my billing rate. I bill $4.35 an hour, and I'm trying to make sure that I'm at minimum getting that amount of money out of it.
Absolutely. And another question that came in, can you ever charge a percentage of taxes saved? And I would probably caution against that, given I think that would be against a lot of the ethics rulings. Mike, do you have any insight?
Multiple choice B that you get, you can't do that.
Yes, yeah, you can't do that. Okay, so let's definitely not percentage of taxes saved, but certainly fixed price billing, and also moving towards value billing as well. But I think that will probably come once you have a better understanding of the client, maybe not in year one, but as year 2 and year 3 and the relationship develops, that's probably when you feel a little bit more comfortable headed towards that value billing strategy. Any comments on the value billing versus that trying to realize your hourly, Mike?
No, I definitely, if I can, set it as a fixed fee and say each year we're going to do, this planning, and that can be a fixed amount, and I can be a lot more efficient, I pick up that additional profit and efficiencies. Or if I can lay some of the planning, the secondary planning off to lower level staff, but at a flat fee, that always works well.
Okay, good. And one more before I hand back over to you, Mike. Does the client get a binder also, or is it just yourself?
I should have said that. Everybody gets a binder. I just had a meeting down Newport Beach area, new client, and they had three owners. I had all 3 owners with a binder. One of my partners, he had a binder, I had a binder. So everybody had a binder.
Okay, nobody's left out.
No, but it's just because they're making notes in there, and they feel like they've got something very tangible. Because a lot of times tax planning, it's that, they don't really see what's going on. Here they're saying, oh, they really need to look at all these things. So, and they'll make notes and stars and say, oh, they want to follow up on certain things. In the selling process, when I'm out there landing a client, I always use the phrase that, if I'm out there, doing tax research and planning, and I'm charging you $500 to save you $100, that makes no sense. If I'm charging you $500 and I'm saving you $5,000 or $10,000, then that makes sense. So I'm always trying to say get them to understand early on that it's all, cost benefit, that everything I'm looking at is cost benefit. That's why I don't charge for the meeting. If, I tell them, if we sit down and do this meeting and you're doing everything and there's nothing to save, I'm happy to say, I'm not charging you for that because I really haven't added any value.
Okay, good. So let's keep moving, Mike. And what we'll do is we'll just the response from the poll there. Do you have a formalized tax planning? Have you formalized the process? And not surprising, 3/4 of the audience saying no. It's fairly ad hoc. So that's a good opportunity to hand back to you, Mike, and keep going with your process. Just click on that resume slideshow, and away we go. Thank you.
All right. Yeah, that XCM, using that workflow software drives it. If you're using Excel, you've got your clients in there, and you're marking which ones you're going to work on, and then once then you still need the process on how to do it. The next area I go into on this slide here is the overall company and entity goals, and I have a worksheet that I sit with them, and I basically want to know what they think their company's worth. At what point, what value would they walk away from the business? Have they thought about, what that value would be? How would they grow it from what the current value to the next value? I kind of go what they think their profitability is going to be next year, the 2 to 4 or 5 to 10. What kind of ownership changes? Do they see any inbound, outbound changes, other acquisitions? And I'm kind of working through making sure I understand the entity goals, not the tax goals, but the overall entity goals. I have a worksheet that I include in my binder that is the entity tax objectives, and I've never had a client that says, it's always they want to pay the least tax possible, but we still go through that area and making them understand that, yeah, our goal is to figure out how to pay the lowest legal tax that we can pay. We kind of make sure if there's any IRS or FTB audits, newer client, a lot of these questions are coming up for a newer client. I kind of go through their risk. Some people just don't want any stress. Some people, as long as I'm comfortable that I can be in front of, this is the term I use, if I can be in front of the tax court judge and explain to him why we did and what case law we were following, and I'm not embarrassed. That's kind of my, we follow all the other rules, but that's kind of my thermometer to know I'm going the right direction. They usually will nod with that and say, yeah, that's where they want to be. And, we can't go back through long-term and short-term tax objectives. Most of that all is that, hey, this is an area that the accountant can actually add value, add working capital to the business, net of what they charge if it's being done effectively. Then I go into my, second to the bottom here, my tax entity and structure planning checklist. And I have, 2 or 3 pages here, 2 pages of entity questions where I'm going through and really making sure they understand why the flow through, why not a C Corp, why a C Corp might work on some deferral strategies. And, I start working through each entity, trying to figure out, I'm asking questions, should their intellectual property be in a separate corp, whose names are on patents, do I have any subpart F issues, do I have any control issues, personal holding issues, personal service corp, So I'm going through all these things so that they know that there's issues out there that I'm having to keep my eye on, and I want them, back to the team sport, to at least understand the basics of, I know accountants, how many times you've explained to the client that, it's S Corp, and whether the cash is not there at the end of the year or is there doesn't change the income. Partnership, same deal. But I kind of go back through all these concepts more for their benefit, but every time I've done it, I've found that, oh, wait, we're thinking of doing this, or we're saying, boy, why don't you put that in a separate entity, or why don't you, let's coordinate with your attorney to make sure that, this is the right entity for that. And we kind of have our rules of thumb on what types of entities we use for what we do. And all this tax planning, your checklist that you guys develop, they got to be things that you're comfortable with. If you don't know anything about 1031, and so then you're going to put on there, I'm going to bring in a 1031 expert when we get to that part, or you're not going to talk about 1031, but you kind of be areas that you know somewhat about. You don't have to be super expert, but if you start to see that that's an issue, you know where you got to put in some effort to see if you can make that work. We go back through making sure they understand the inside basis, outside basis. I mean, this is, that's why you can see how this one little section right here, this burns up a lot of time, even though, I've only got two pages of detailed questions, it's enough where they really start to understand it. They understand how, their multi-state nexus works. So I'm going, my next thing, I'm going through a multi-state tax checklist to see, do we have these issues, so that it's not a big surprise. I hate when you're preparing a tax return and you get to the end and you start to find out that they've got all kinds of tax planning, multi-state issues, and you only got a couple days to get the return filed, or you get notices after the fact. The next area I go into is my tax accounting methods checklist. I go into all that detail, and I go into quite a few different tax methods so that they know that they exist and why we do what we're doing. And, am I at the point where I'm going to, have an issue of having being forced into accrual if I've been cash basis? Why did we start out cash basis? Why did we start out accrual? And then just start working through all the other tax accounting methods that we all know. But I got a detailed checklist of all that. Then I work my way through kind of a business succession checklist. How do they really plan on leaving? Is it going to be a cash cow? And they like to talk about, this is an area that they really like to talk about. I go into my next one is my transaction planning checklist, and I start working my way through basically saying, what major transactions do you have, and have you thought about the tax ramifications? And it's interesting, as we go through the checklist, they go, oh yeah, we're thinking of doing this. Oh yeah, we're thinking of leasing this. Oh yeah, we're thinking of going into this area. We're going to buy this. And we basically start to go, that prompts questions. My whole binder is to prompt questions so that I can say, okay, let's figure out what's the best income tax planning for that. And then I work through some pretty general estate and gift tax planning. I mean, for show, my checklist has a lot of the, grats and cruts and all kinds of stuff, and I may be able to explain a couple of those. But, depending on the age of the owner, we talk about, and usually this gets pushed off to another meeting. It's just too much from what we've tried to accomplish so far. But I've got enough to grab my, that they know that I'm involved in estate and gift planning. I want to know enough so that the estate attorney is not running ahead of me, that I'm the point person. So a lot of times they go, oh, I didn't know you knew about that. I didn't know you did that. And I go, oh yeah, we like to work as a team with the estate attorney. That way they don't mess up. I would say, hey, don't get the attorney mad at me, but that way they don't mess up my income tax planning. And then we kind of go through a tax compliance checklist where we're talking about things that need to be done. There are little areas about documenting auto is a kind of a nerdy one for me to bring up, but some of these tax compliance things, and that kind of, I find some guys just, those aren't as important to them. When I say, hey, let's do things that will bring down your audit risk to make sure we're really complying in these areas, they pay more attention. Others just love it because they feel like, oh, I've gone through this checklist and there's quite a few things that can be done that will bring down my risk, or, oh, I didn't even know I needed to do that. Oh, I didn't know that independent contractors was even an issue these days. We'll go into some retirement executive compensation. Usually we basically will work with, we have our firm, we have a partnership with a financial planning group that we work very closely with, but we'll use our third-party administrator, and we'll just say, do you have a plan? Do you not have a plan? You've got how many employees? Why don't you get me the last census you have? And I'll get the third-party administrator to start working on that separately. They never bill me for that. They're just hoping they'll be able to figure out a plan that might make sense. We go through a little bit of tax-exempt and tax-deferred strategies, and we have our checklist there. If I need, I go back through the book tax analysis checklist, and I basically show them what's been happening to their tax return and how it switches from the tax method to from the book to the tax. I also work with them to make sure that the cash to accrual, they can't understand that a lot of times. As the economy's gone down, a lot of people are losing money, but they've been cash based or an accrual, but filing tax on cash. and all of a sudden they have income in a lost year. That just drives them crazy. But we work our way so they understand those items. You know, for show business, because you know they've got their binder in front of them, so I've got every possible federal tax credit on the federal list, and I've got state and local credits. And you know, I just like when they go through that and they really start analyzing, you know, do any of these things apply to me? Well, we got to make sure they do. You know, I always like to point out the you know, breeding hogs and orphan drug credits. I myself never run into since I've been out here, but we work our way through those credits. The one area that we do focus a lot on is the research and development, the R&D checklist, and that's one where, you know, if you've got the in-house capability of doing a lot of that, or there's a lot of groups out there, Damien, that you've put us in touch with that basically will do the R&D, either become your back office or they'll just do it directly with the client. But you know, I see that R&D credit lost a lot of times. That's not being done. I go back through cost segregation. You know, it's fun on a new client when I go through, you know, they've got real estate, and I'm glad when I see they set it up in a separate LLC. But then when I see just land and building, you know, split 50-50, and they've got 39-year property and land, I like to say, boy, you know, when we're involved, we get through and we break it out between, you know, 39 or 27, depending what it is, and 15-year property and 7-year and 5-year property, and we have methods that we have enough real estate background that we do some of the cost seg ourselves. If it's a larger property, we'll always bring in a specialist to cost seg the property. I know, Damien, you and Chris have worked with a few of those companies, and you've been happy with a few of those, but that's a hot area. So, you know, all these items, I use these as, you know, when I'm talking to a new prospect, I tell them about what I do in my process. I'm just chipping away at their accountant who's not doing this stuff. So if the accountant's not doing any of these things, I've got an easy way in to start landing that client. I go through some of the, you know, property tax checklist, work my way through to make sure there isn't anything weird going on there that we should be aware of. We definitely, if it becomes a, you know, California got Prop 13 issues, but every state has some valuation issue, and you know, a lot of times we'll bring in professionals on that. I have a hot audit checklist. They always like to talk about which one of those things are hot, and you know, I always have people ask me, how hot is my return? Am I, you know, I'm like, well, we got to be, you know, everything's honest. It's back to our, you know, do we have the support? Are we going to be embarrassed in front of the tax court judge? But here's the areas that we may not want to push, and we go through that checklist. And but you know, because they're seeing it must be very aggressive in a lot of areas, but some areas we point out that, you know, it's not worth it, and you know, it's really hard to explain that you were really, if you never ever have work in Las Vegas, but you happen to be at that one casino for a week, and you got one brochure from a real estate office saying you're doing some kind of business, it's a little thin. So we kind of go through all those areas. And then we got a 1040 family tax planning checklist. And then at the end, I have my business tax follow-up, where I've kind of been post-noting things, creating notes in the back as I've been going along, because I want to know who's going to follow up on what. Because a lot of times, you know, I'll say, hey, I need 3 or 4 hours to research this. If I think it's something that's worthwhile, after I spend 2 or 3 hours, you know, it may take more time, but I don't want to spend the time until we know that it's something viable. And you know, I'm basically selling additional accounting hours at that time, but I'm you know, doing real tax planning. I explained to them that we don't want to be the IRS test case, and you know, I tell them we've got to document the file and their files. We don't want to leave a roadmap for the IRS. So, you know, definitely I'll have promissory notes. I'll have revolving notes between the corporation or the entity and the owners. I have what I call my tax corporate minutes, where I make sure that certain things are in the corporate minutes, and then I have my, I don't like to use the word side agreements, but I have my separate shareholder agreements, where there's certain things that we've agreed to between the owner, even if there's only one owner. We've agreed to this. If this happens, then this is how it would be unwound. But I don't leave that in my minutes, because if I'm in an audit, they want to look at my minutes, or if they ask for my shareholder agreement, I give them my main one. I have some of these others that, have been signed and dated. I don't want to do anything during the audit. So I really push the client to spend the time with us, so that they've got that documented, and they can sleep better. I can sleep better, and I make money doing all that kind of stuff. Tips for the compliance process. What I hate is everything gets going on automatic pilot as tax season starts, and you come up with a great tax plan, and if you're not on top of it, it doesn't get incorporated into the return. Nothing would be more embarrassing to have done all this work, they paid this money, and then for some reason we haven't made a certain election, or we haven't delineated something we wanted to delineate. So I usually write some type of memo where I keep that in my binder, where we've gone through what we're going to be doing and what needs to be on the tax return. Like I say, I don't know, I'm doing a commercial for XEM, but I use them. They have, they're in their review notes section, like right now I'm putting notes in there today for 2013 returns, and each item that I need to have in there separately, I've listed as a separate item that only I can close that item once I've seen it, that I need to make sure the 754 election has been made on that partnership, that I've done the step up, and we've done the R&D, and I've listed all those items so it doesn't get past me. And then back again, on the part of the compliance process, once I get everything done, the return where I like it, a lot of the items we follow up and say, okay, have your attorney include these items, these bonuses, these pension contribution, et cetera, to the corporate minutes. Again, don't be the test case. We want to make sure that we are, we're not the test case, that the IRS will go on to another client that may not have these things, and because those are the cases I usually see that the IRS wins, they don't have any kind of support. Just to close here, self-audit basically, do I have a process for existing clients? Do I have a process for prospective clients? Do I take the time to meet with my clients to really plan? These are basically like your poll questions. I always throw this in because I've made this mistake over the years, is I never let the tax tail wag the dog. I definitely don't want, I wouldn't even be doing a captive if I didn't think there were business reasons to do it. But there's, I didn't sell my .com stock because I didn't want to pay the tax on it. It went to zero. I had the chance to sell it. I always think back, boy, I let the tax tail wag that dog. It would have made sense to take some money off the table. All kinds of things like that. So taxes, for tax people, when you think of tax first, when somebody says, oh, I'm having a bad year, you go, oh, you've got a lot of good losses on your return. That's great. I hate when I talk like that. So I've got to make sure business first, tax is the frosting on the cake. And then this is back what we've been talking about, that you got preparation, the process, and the results. And I usually, when I'm trying to sell the process, I'm showing clients these diagrams where there's a certain amount of requests, so I'm getting ready for the meeting. I like to walk the business to really have them show me the facility. I went out on a new client, or it actually was a prospect. I've never spent 3.5 hours, but it was such a large manufacturing facility. We just spent a long time going through each parts of the process. Now, when I land a client, I'm definitely charging them for all my time because I did spend a lot of time understanding their business. But I throw all that in, we map it out, and then I'm walking through if I need to interview other people. There's my Tax Diagnostic meeting we've been spending all our time on. I'm going to have more research that'll go into that meeting, and that's when we're coming up with our tax strategies there. And then we present it, and going through our, have I taken it to compliance? Do I make sure I've got the proper disclosures on the return? What does my audit risk look like? So I walk them through when we're done what we've done. I love to come back and say, we've saved you this much money in the planning process, and I'm not embarrassed to tell them that. And then my final slide here, I love that a client in November can kind of know what they're going to be paying in April 15th. They know where they're at so that they can plan that ahead of time. And Damien, I'm happy to, and I know I went through this very fast. There's lots of pieces, but I just wanted people to understand that you do need a process. It's one that you're comfortable with. And I'll turn this over. This is what Premium had given you.
Absolutely. Mike, thank you very much for that. There's a couple of questions as well, which we will get to, but really important that everyone takes down that URL at the bottom of the screen there, and I'll make sure that gets emailed to everyone as well, bit.ly/tax-kit, and that'll get you the email template, some phone scripts that Mike's firm uses, an example tax planning checklist, example planning meeting agenda as well. And Mike, you're also looking at how we can share some of those checklists that you've developed in-house with 2020 Premium members. So we'll let everyone know how that's going to take place in the future. Are there any other resources externally that you've brought into your tax planning process that has helped? You mentioned XCM as a workflow software that has been really helpful to manage the process. Any other software applications or any other outside providers that have been very helpful as a part of the tax planning process?
Yeah, I mean, I use, and I'm not proud of it, I use CCH for our shop here. They've gotten better in a couple areas. Other areas they've fibbed to us for a long time that they're going to make it better. But, we definitely use tax planning software where we're projecting. And, because you can get yourself in trouble a lot of times, you're trying to make another version of prior year return, and you try to use that as your projection software, and you don't realize like the R&D alt-min credit isn't available anymore. That you have all kinds of problems. So I use the CCH tax planning software. I've used BNA tax planning software. There's a lot of them out there, but I definitely need the projection software because when we're all done, I'm turning those into numbers. But that's basically what I use. Something to drive me. Something where I collect up all my data, my binder, and then I got to do the calculations. And then if I need to bring in professionals, it's usually because they're R&D or cost seg people or pension people, things like that. But I make sure that I'm the point person.
Absolutely. I think that's really critical. And what I'd encourage everybody to do is go back over some of those slides where we look at the tax planning checklist and just identify who some of those outside people might be to help us with the R&D credits, or maybe 1031 exchanges, or cost seg, as Mike mentioned. And please get in contact with us because we've got member firms around the country who are experts in 1031 exchange, for example. I know Weeby Hinton Hamberleck out of Fresno, great firm that have a great specialty in that. But we also have great relationships with R&D credit firms, cost seg firms. So let us help you fill that list. But Mike's right there. You want to be the quarterback, or whatever analogy that you want to use. You want to control all of those relationships. Mike, another question that came in. Do you have any idea of the type of tax savings you'll be able to bring to the table before you sit on in that meeting? And does that impact how you price that meeting?
No, I mean, no. I've never had it where I haven't found something. So I've never had that issue come up. If you got to something, because every time I've come up with something, so I mean, no. But the meeting will be shorter if you can't find something. So that'll happen. I'd be also, one of Premium has also been somebody that I brought into a lot of my secondary tax planning meeting because that's become, I'll get in trouble with Premium, but that's become a really good tax strategy for me for both income tax and estate. They've made me look like, I know all about it, but those at Premium are the guys that really get into the detail I've backed up a lot of CPA firms around the country on their captives, especially in the estate area, where, I'll kind of spend a little time for premium in back office and say, boy, here's the deal. If we're my client, I would do this, this, and this, and I'll work with the CPA, and they'll have something pretty good to show their client. But Jeff Moffitt's been really good at making sure, that's my client. I'm in charge of my client.
Yeah.
It's not like the attorney trying to take away my client.
But for example, if you see some, just in your planning for the tax planning meeting, you see that there's $10,000, $12,000, $13,000 on the table, does that impact how much you're going to charge that meeting? Or do you think, you know what, as long as I recoup my time, there'll be a ton of work beyond this meeting, and my clients will love me for forevermore?
Yeah, I don't look at it and say, I've saved this much money. I know some of the big four, big eight were out there. There's some ways to do these savings, but most of those have ended up being a problem. I find that if I charge a good flat fee, or I'm getting at least my hourly, or both partners are getting their hourly for that tax planning meeting, but usually I get double or triple the time afterwards, if not more. So it's having this meeting, provides a lot of additional billings. It just, I've never had it not happen.
Mm-hmm.
Always the good news, we've got another new client. Bad news, now we got to do the work. It does generate a lot of work. So if you don't have processes in your firm to figure out how to get this work done at the lowest level possible, with the high level of quality assurance, then that's going to be a problem. But that's why you work on your top clients down, to make sure that they're being planned for. And if I get down to a small client, it's there really isn't a reason for a meeting, then I still try and at least have a discussion by phone and go through. Let's say that we're going to go over all these items, but
mm-hmm.
I usually don't make it that far down the list.
Okay. Good stuff. Mike, one other question did come in, and it related to the actual the process or the order in which you do your planning. And in one of your slides, you said income tax planning precedes estate tax planning and asset protection planning. One asked, why wouldn't they be done simultaneously? Or is it the case that they are done simultaneously, just in 1, 2, 3 order?
There may be a really good estate tax planning reason to use a C Corp, and you go, boy, I can really make that a C Corp, and but the guy that owns the thing is 20 years old, and you'd have a great estate plan, but for the next 40 years you've got a bad income tax plan. I've got to do my income tax planning first. I always do my income tax planning first. I'm gathering up data to do the other as I go along. If it's a simple living trust, I'm making sure if they don't have that and they've got a good-sized estate, I'm making sure that's getting done simultaneously. But I'm not getting into it. I always do the income tax planning first, and I'll build on it. That's why I have a checklist so they know I'm at least thinking about estate planning. But I don't want to be down the path where I'm having to backpedal a whole bunch of estate work because I'm trying to save income tax. That's too expensive.
Okay, fantastic. Thank you. So, Mike, I'll just get you to go to the next slide, if you don't mind, please. But hang on. Just make sure you've got that bit.ly tax checklist. Just remind everyone that next Tuesday, same bat time, same bat channel, we will be actually focusing on turnkey captive insurance solutions that can be a part of this tax planning process. And Mike, how many clients in your client base have you found that captive insurance are applicable to?
I probably have about 25 that fit me. I've been focusing on high net worth clients with large operating businesses. I find a lot of CPA firms have 4 or 5, but
yep.
What I don't want is some young insurance guy or a financial planner guy coming up to my client and talk about captive insurance, and then have my client say, why haven't you ever brought this up to my attention? So at minimum, I want to make sure that I'm the first one to talk to my client about it. And I'm seeing more and more of this being done where the financial planning guys are out there talking about it and beating CPAs to the punch.
And I think that's the real key there, is, and why everyone should be on the webinar next week, just to make sure they're aware of what is going on, what is available, so that they can talk intelligently to their clients. There might be 3, 4, or 5 that this is applicable to, but let's just make sure we're not being beaten to the punch by, as Mike said, some young upstart talking to them about captive insurance. So Mike, just maybe the next slide, if you wouldn't mind, please. So join us next week for that webinar. It's Tuesday, October 29 at noon PST. You can sign on at 2020 Group USA. And just one last reminder for our CPE, the other URL that we need, and I'll just be sending that to everybody now, but for anyone that requires CPE, just make sure we do take that survey at ProProfs, it's called, and that's how we're distributing our CPE. But Mike, thank you very much today. I appreciate your insight. Everyone, if we do have any questions, please shoot those through to me. Just keep an eye out there for those 2 links, one being the Bit link, one being the Google link, and I'll email everyone for the handouts, the checklists that Mike has made available. But thanks very much, everybody, ladies and gentlemen, and look forward to seeing you online at our next webinar. Have a wonderful afternoon. Thank you.